Take your seats. Hopefully you had a nice little ice cream break and you've got a bit of a sugar rush that's going to be coming on for the last part of our show. So we covered a lot of ground today. We covered a number of different panels ranging in topic from the Internet of Things to big data to agriculture and technology and a whole bunch of other interesting topics. I think we tried to break this down in a really practical, straightforward manner. But it's really kind of all come down to, I think, this for our last sort of presentation and format, which is really an overview of the outlook for venture capital, not only in Ireland, but in Europe and more broadly in the United States. So I think this is going to be a fascinating discussion. We're going to do sort of a Dragon's Den format. And what I'd like to do is ask Barry O'Sullivan to join me on stage. So Chris. Hey Barry. Barry is the CEO of AltaCloud and an investor. He's also going to be the moderator for the aspect of this, this panel. Elaine Coughlin, partner with Atlantic Bridge. Nice to meet you. Sean O'Sullivan, founder of SOS Ventures. John Flynn, managing director, ACT, and chairman of IVCA. Pleasure to meet you. And Sean Gallagher, entrepreneur and investor. Sean, thank you.
Chris, you too.
Barry, I'm going to turn it over to you. Thank you.
Thank you. And well done on getting the names almost right, all of them in terms of the pronunciation. His pronunciation has impressed me all day, and especially when he had to say Brian McCrath, which I had to write out phonetically for him last night, so he's been doing a great job. And we've got a fantastic panel of venture capital folks here today, and I was just calculating off stage that roughly $1 billion between these people here. So for all you young companies out there, you know, listen carefully and then collar them outside or at the dinner later, because these are the guys with the checkbooks. So a great mix in the panel too. We have our two Sean Dragons here, Sean Gallagher and Sean O'Sullivan. And Sean Gallagher is serial entrepreneur, kind of representing the entrepreneur perspective on the panel. And then we have Elaine Coughlin from Atlantic Bridge, who is founder of Atlantic Bridge, general partner at Atlantic Bridge, and also the Ireland-China Fund, which is a very interesting topic that we'll get into as well. Then we have John Flynn from ACT Ventures, who also is currently president of the Irish Venture Capital Association, so it's got a broad perspective on what's going on in Ireland. And that's where I'd like to start really is, you know, if you think about the global venture capital industry last year, close to $60 billion invested, it seems on the surface of it to be the best time ever to raise money if you're a tech entrepreneur. So what I'd like to do is maybe start with Elaine and, you know, talk a little bit about what you do at Atlantic Bridge, but give us that perspective. Is it the best time ever to raise money? Is it a bubble?
Thanks very much. I think, first of all, is it the best time to raise money? Certainly in an Irish context. John will talk later, but so far this year, Irish companies have raised a little over 600 million, and we're not quite halfway through the year. And last year, I think for the full year, it was around, was it 400 or 500 million? So I think we're on track this year to probably, you know, could possibly get close to that billion raised this year. And I think it's interesting that's across, you know, all the sectors, so seed, which we'll talk about, all the way up to scale up and even buyout. So I think it is a very good time. I think there's a lot of existing funds and new funds coming onto the market. I think, is it a bubble? I think from our own experience in Ireland, it's very hard to spot bubbles. So we probably should have the expertise in being able to spot them. I would say that in some sectors, for sure, valuations are, getting to a point where the mere fact that we're talking about a bubble means that, there quite possibly could be a bubble. I would think, though it's quite specific to certainly consumer internet in the US. So if you look at companies like Uber and the type of valuation they're at, 46, 50 billion. At the same side, I was here in 2000 when we had the dot-com bust, and a lot of great companies came out of that, like Amazon. So I think companies like Uber, there will be successes, and they will have earned that valuation. But generally, if you're thinking in Ireland, if you're looking at Ireland and Europe, I would say there isn't a bubble in terms of valuations. I think it's quite realistic both for the entrepreneur and for the investor. And the reality is, if you're in Ireland or Europe, you have a lot of work to do to scale your business now in this kind of global market.
And what sectors are you investing in Atlantic Bridge? And what are you staying away from as well?
Well, that's interesting. I think for us, we stay pretty focused on sticking with the knitting, what we're good at. We do both hardware and software, which is finally actually coming of age with things like the Internet of Things and robotics and drones and wearables. So that combination of hardware, software. So we're very focused on that, but also on software. So the big growth trends, the intersection of cloud, mobile, big data, which is throwing up so much disruption, and growth markets. So, I think, for startups or spin-outs from universities, you got to be focused on where the growth is. It's no point in building a fine company, but it being in a flat market because, it's very hard to defy gravity.
Right. Okay, great. And maybe, John, I'll ask you to give the Irish perspective, talk a little bit about what ACT does, but also where Irish venture capital is in general.
So, Ireland has, I guess, had a very good run for the last 5 years in terms of venture. Elaine mentioned some numbers. So last year, the total amount raised in venture was just over 400 million euro, which represented about a 40% uplift on the previous year. So it's been a very good run in Ireland, probably paralleling what's been going on in the US over the last 5 years. But I would say Ireland has got quite concentrated at the seed level, so we've got quite a good and very healthy, vibrant ecosystem that's been developed in the seed space over the last 3 years in particular, and there's been a huge growth of incubators and accelerators, some growth in private investors and angel investors, and we as VCs are working with them at the seed level. So we're getting a very healthy pipeline developing. In contrast to the US, we haven't had too many very late stage, if you like, companies being developed yet, and I think that's a function of where we are in the cycle. And we've probably been protected from some of the very heady valuations that we're seeing in the US at the moment. So, I think what's happened in the US, if I could just speak to the US for a moment, is that a lot of the late stage financings have been replacing what would have normally been IPO or public company financings 10 years ago. And certainly that's, was the norm back in the, if you like the bubble of the 2000 period, 99 period, where a lot of early stage, what should have been private companies, were getting out onto the public markets. What's happening now is there's a lot of very large late-stage financings happening in the US that are still private. So if there is a bubble, it's very different to what happened 15 years ago. And I think, we're probably protected from that in Ireland at the moment, but we're seeing some companies start to develop into later stage rounds. We're starting to see, we had just recently, I know Movidius had a 40 million round. Cubic, again, focused on the Internet of Things, had an 18 million round. So we're starting to see the product of all of the seed work that's been put in over the last 5 years starting to develop later stage companies.
We think we're going to, in Ireland specifically, going to run into a Series A crunch. You hear people talking about that in the US, which is this phenomenon of, lots of maybe inexperienced investors at the very early stage, which means lots of companies, and then chasing not as much Series A money. You think that's something we're facing here in particular?
Yeah, without a doubt. I think that is a big issue. It's probably the issue, and we'll talk to some other issues later on, but I think there's plentiful supply of capital at the back end for companies that have proven business models and proven growth markets, and they can raise very large sums of money. and everybody wants to be part of that. And there's kind of a new breed of, if you like, larger funds emerging that have emerged in the US. And even on top of that, there's a lot of hedge funds and non-traditional VCs that are piling into those companies at very large valuations. Mind you, it's worth spending a moment on the valuations. Although the valuations are very large, they're probably not comparable to a public market valuation. So when you have a VC that goes into an early stage round and invests maybe 10 million for 30% of the company, and then, you know, a year later can raise 30 million at $1 billion valuation, he's probably preempting his average holding valuation is still 20 million if he puts a third of that money up for $1 billion valuation, but his average holding is probably, his holding value is at about 60 million. So there's a lot of optics, and the other feature of that is in the later stage rounds, there's a lot of what we'd call liquidation preference and structuring that allows people to have very high nominal valuations, but because the late stage investor has a guaranteed return, maybe of 1x, maybe even of a 2x valuation, they can afford to push the nominal value very high. And really what they're trying to do is set the company up for a public offering valuation. Right. So there's a lot of money for those features and those reasons at the late stage, and I think we mentioned that there's quite a good supply of capital at the early stage, although it's a lot of newcomers into that in terms of angels, which, you know, would probably augur for the type of concern that you're highlighting, Barry, which, you know, is really what happens at Series A. And I think the Series A being the round where a company needs to have shown that it has de-risked a product, got a good product market fit, and have some good referenceability and, you know, be attracting capital to scale that. That is where there's a dearth of capital, both in the US and I would say in Europe.
Okay, great. So Sean O'Sullivan, you're investing globally. You're investing in Ireland, you're investing in the US, you're investing in China. And then you also have this model with the accelerators. Yeah. And then you have all this investing philosophy around, you know, investing in things that are not just going to make you money, but are, you know, roughly pointed at social good, let's call it that. Talk about that overall, and in the sense of your investing philosophy and what you see in the venture capital industry overall.
Well, you know, just sort of to tackle that last one first. You know, I think what's good for society can make you money.
So you can do good and do well.
You can do good and do well, especially if you spot a megatrend, you know, a bit before everyone else, and you develop that megatrend for, and an ecosystem around that megatrend for, you know, 10, 20, 30 years. You can let that run very far. So in the areas that we focus, yes, we think that these are areas that are good for society and good for humanity, but these are also things that, because they're good for humanity, people want to buy them, you know, and so they'll be buying them, you know, hand over fist. So I think you can do very well on that. I mean, our investment rate of returns historically have been around 36% net IRR after fees and carry, which is, you know, I put us up against anybody. We're in the top couple of percent of VCs globally, if not in the top 1%. But the key is in getting in areas that matter and getting in early and developing a strong pattern and a deep, you know, expertise base so that you can really help your companies tremendously that are going through your, you know, going through the
What is an example of, you know, an area that you've invested in where it's good financially and it's good for the planet? Okay, so, you know, the Internet of Things area, there's so many examples of that. Right now, SOS Ventures runs HAX, which is the world's leading accelerator for hardware devices. It's in Shenzhen, China, but all the companies that apply are from all over the world. There's even one Irish company in the program right now out of the 15 that are in the current batch. But we launch about 30 consumer electronics companies a year, but many of these are for, like in the case of that Irish entrepreneur, you know, entrepreneurial team, you know, it's a bioprinter that's really very, very interesting to be able to print tissues, print skin, print
at a much higher resolution and much lower cost, even just for research purposes. These 3D printers, taking the 3D printer technology and applying it to tissues and applying it to biology. So how does that help people? It helps people with, you know, skin grafts in burn accidents, or it helps people who are actually trying to, you know, grow ears and grow organs that can be actually implanted into people's bodies. We're doing things in synthetic biology where we run, we have 4 different accelerators that we run globally at SOS Ventures. One in consumer electronics, that's the HAX one in disruptive food, which is in New York, which is another area that we think is very important for humanity. Third is in the area of, what did I say, HAX, synthetic, food X. In IndieBio, which is our synthetic biology program, which we run both here in Cork and in San Francisco, and China Accelerator. So each of those are sort of in the next 20 or 30 years, we think those are going to be major marketplaces. You know, the Chinese marketplace, you can argue about whether China is good or bad, but is it going to be important economically in 20 years? Is it going to be more important in 20 years than it is now? The fact that we run the leading software accelerator in China helps us tap into a large and growing market and hopefully shape that market for good applications. The synthetic biology, people don't necessarily know what that is, but it's basically like what you do with, you know, plants and animals, and we're just doing that with, my mom was a diabetic, so synthetic biology allowed her to have insulin. So originally, they would take insulin from cows and pigs and then give that to humans. But now with synthetic biology, they take the DNA from a human, they then create in a lab a vat that then generates that from a feedstock, it generates insulin. Now, it doesn't need to be done just for pharmaceuticals, and it doesn't need to be done just for diabetics. It can be done for a whole range of people that need food products for an expanding population in a resource-constrained world. And it can also be done for lots of other, lots of other sort of petrochemical applications and other sort of resource development. So these are trillion-dollar industries that are developing.
Very cool. So, Sean Gallagher, you spend a lot of time mentoring entrepreneurs. You have your feature in the Sunday Independent every week where you write about, you know, a great role model, a great story. We heard from our other panelists, like Sean's returns at 36% IRR, amazing. Venture capital up 40% year over year. Great time to raise money. Is that what you're hearing from entrepreneurs when you talk to them?
Yeah, and I guess there is a lot of activity out there in terms of the investment market, and certainly in the last 3 to 5 years, and I think John mentioned it, that there has been a lot of new funds, whether that's the VCs, whether that's now with the Minister Noonan mentioned it earlier in terms of the strategic investment fund, investing in funds, and also we've seen the growth of the business angel networks and syndicates. So there's a lot of money out there. I think, in truth, the challenge still exists for the entrepreneur to access, particularly that initial 250,000, that first $500,000. And I think maybe there are a couple of things that I'm beginning to see as a trend. One is that entrepreneurs who are, I would consider, the first-time startup find it much more difficult because they have never navigated. And if you haven't navigated that field of fundraising, it can be a challenge. Those that are on their second or third startup, I think, have already established the knowledge of where to go to, but they also have established, I think, credibility. And Elaine and I were talking earlier about this factor of trust, that funds will invest in you once, I guess, they have some degree of comfort of your ability to deliver and to be realistic in your targets. I think if we look, and again, the figures are somewhere around, we were just talking earlier, off stage, that for some of the funds, they're approving perhaps 1 out of every 10 in the early stage, in the seed rounds, that actually pitch to them. So to me, that would say that there's a lot of wasted time on the part of the VC, not meeting a lot of companies that they perhaps can't give money to, but not necessarily the guys I know give amount of help, guidance. But I think for the entrepreneur, when you're busy dividing your time between developing the technology and still having to go out and fundraise, and very often there are two different skill sets. You're trying to do two things at the one time, and essentially one is reliant on the other. And if you're spending a lot of your time not knowing where the money is, you're wasting time. And I think so. I think there's an opportunity here for the funds to communicate better exactly where the fit is, because lots of entrepreneurs, their business just doesn't fit what the guys are doing, and so these guys have a mandate from their investors as to what fits. And if they're not there in that fit, it's a waste of time for everybody. So I think there's a piece there that would make it easier. And I continue to say that entrepreneurs, and it's great to see the work that's being done in a lot of the accelerators like Sean's and others, and in the colleges, they're preparing the entrepreneurs much better to be able to pitch, not just about the love of the technology, but more important, how that technology will be deployed to a market which is growing and also a market which is global.
Very good. I mean, I think like one of the, you talked about just navigating as a first-time entrepreneur, like where do I start? And, a lot of the startup communities around Ireland are, having meetups to explain that. The VCs are great at coming to speak at those and ask questions. And one of the initiatives that Sean O'Sullivan started is something called officehours.ie, which is basically an online time booking system that you can book your time with experienced entrepreneurs, including Sean, including myself, that you can book, a half hour and just have a chat with them. If you don't know where to start, talk to people who've already done it. I think that's a good idea. Sean, you talked about China, and Elaine, I know with the Ireland-China Fund, you're very active in China also. Tell us about the Ireland-China Fund, and for the Irish companies in the room, what's the opportunity there for them? Because I think, it's not the first thing that comes into an Irish company's mind when they're starting out, is that huge opportunity that's there.
Sure. Well, Sean already referred to China as being, there's no doubt that it is the second largest economy, and the trends there. If you look at the Chinese trends, China's looking westward and outbound, so it's got quite competitive in the China market. So the companies that over the last 10, 20 years that have grown up, building big market share, now have quite a bit of price pressure, and also in China, places like Vietnam are now a huge cost pressure for them also, because it's 5 times cheaper than China. So China is finding itself having to move up the value chain and innovate, and no longer just be a fast follower, but actually, be a leader. And I would say the one area I've seen them leading in at a global level is probably drones. I mean, they're the #1 manufacturer there, and they're hot on the heels and cell phones, I'd say now, and next generations, well, and some of the synthetic biology. So I think as an Irish company looking at China, it's a tremendous opportunity to partner with these Chinese companies, both as customers and I'd say ultimately as acquirers. There's no doubt that they're going to buy, a lot of brands, and they value heavily distribution into Europe. The US is a difficult market for them, so that really leaves Europe and Latin America. It's a difficult market, so I think you need partners, but the rewards are tremendous. We've had a number of Irish companies that have won absolutely humongous contracts in China with Chinese partners, and I think the Chinese themselves have a saying. They say the best time to plant a tree was 20 years ago, and the next best time is now. So in other words, kind of get on with it. And I think from an Irish company's perspective, China takes time. So it's not, I would say, for Irish startups targeting it if they're already there, perhaps, but very much on companies that have some level of management capability, and to be able to hire people in China, it's difficult. So having a partner like the China-Ireland Fund that has people on the ground, we've 25 people in Beijing, Shanghai and Shenzhen, having people there that have the partners, the customers, know where you fit in the ecosystem, just jumpstarts all of that process. So I think huge benefits to be had, and it's a kind of a longer term, I think, plan for Irish companies, but we've probably been on the back foot, I'd say, compared to some of the other countries. Germany, the UK have all done, UK, Germany companies. When you're out in China, you see quite a lot, and obviously, you know, the American companies are struggling in China now, so that's again an opportunity for, if they can rip out Oracle and replace it with an Irish software company, they're quite happy to do that, you know.
If I might say too on that, Barry, and I think that's a great example, that, and you mentioned about writing in the Sun Independent, and I think in Ireland, and I think Mary mentioned it this morning in terms of Coder Dojo, and I was delighted to be at the first ever one of those back in Mahon in 2011, that there's a real importance here, if we want more entrepreneurs and we want more people to look globally, that we need more role models. And I think it's one of the things we need to do in Ireland, and thankfully I'm beginning to see that change in the positivity in terms of how entrepreneurs are perceived, in terms of their ability to contribute to economic recovery and also job creation. But, you know, there's a great saying that if you want me to be great, you must show me what great looks like. And so I think what we need to do is get more and more case studies out there of Irish companies who have gone abroad across a range of different sectors, and also built into that, which I try and do in my weekly column, is what are the lessons that process that entrepreneurs have gone through, gotten funding, going overseas, what lessons can they now share with those who are on the start-out journey? Because very often entrepreneurs are in this silo working away, and very often they don't get exposed to this international experience. So I think through the networks you're talking about, the Ernst & Young alumni, the entrepreneurs organizations and all of that. But I think, you know, people in the media, I think, need to also highlight case studies so that other people have things to emulate, that they too can achieve the same success.
But John, what are some of the shining examples in your portfolio? What sets them apart? You know, if you think about some people in the audience who are at the very early stage, like what should they aspire to in terms of the team, the focus, the model? What are some good examples?
Well, it depends on the stage of company, but if you look at some of the examples where people have done very well, it has attracted not only our finance, but finance from international VCs. It's been a real, I think, we've talked about, a high growth market, a large market, a timely market, a unique offering. And then I think, above all, it's about the team and being able to really be a talent magnet. An entrepreneur needs to really figure out, what domain they're in, what are they trying to solve, and then try and eke out the best people in the world to come on board as advisors, to come on board as product managers, and really tap into that network as you expand that team. So, examples would be TrustHev would be a good example at the moment, I think, of an early stage company where Pat Phelan from Cork has, dedicated his life to moving to New York. So once you get customers on board, refine your product, get that real product market fit, actually move close to the customers. And I think that has to be a founder-led activity. So he's taken the time to actually move out to New York to be close to where his customers are, and it's worked out very well for him in terms of attracting further financing and attracting that type of talent and really getting noticed. We talked about scaling companies at the other end of the screen, the scene. We had a company called Cape Clear, which got purchased by a company called Workday. And an exit is just another point in the life of a company. So that company was, it made its base in Ireland, put its engineering resource in Ireland, but attracted the right talent and realized that it needed to be connected to, and you've got to realize where to put that international base. Is it close to customers? If it's in a fintech space, it's likely to be New York or London. But if it's in the sort of deeper software space, it's probably likely to migrate over towards the west coast of the US. And they did that from a very early stage and attracted some of the top tier US VCs, which allowed us, even in a slow-moving market. So the market actually was, this was 10 years ago when the market was very slow to adopt. It was transitioning from enterprise software to the current SaaS models. And it just seemed to be that the whole enterprise world had overconsumed on software during the 90s. So it was a tough station to be trying to build a company at that point. But they surrounded themselves with the right talent, and they got acquired by a company which was an interesting connection. So one of the VCs that had invested from the US was a guy from Greylock Partners, which is a very famous VC that has backed some stellar companies. And they backed another company called Workday. So we were bought out by Workday, and Workday went on to become a $17 billion company, and currently has about over 200 people based in Dublin. So that's,
great story. Yeah.
A fantastic story. Yeah.
So John talked about Pat Phelan moving to the States. Sean and us two O'Sullivan Dragons are moving to, well, I'm moving to the West Coast this summer, and you're moving to the East Coast.
Yeah.
As you look back at your time in Ireland, and I know you're going to continue to come back, but I think we're all grateful for some of the things you did here. Bankrolling Coder Dojo and James Welton in the early days, that wasn't important. I don't think Coder Dojo would have got where it was if it wasn't for you. Inspiring a lot of tech entrepreneurs on Dragon's Den and the work you've been doing around that. But you were also on the innovation, committee that Minister Bruton set up. Like, how have you seen the ecosystem evolve in Ireland while you've been here?
Yeah, no, I mean, I think the ecosystem in Ireland is the strongest it's been in, since I've been here. Like, I guess that it was actually fairly strong in the early 90s, as well. So it seems like, and if you remember to the successes that came out of there, those are world-shaking successes. I got a guy on my board of directors, Joe Cunningham. I don't know if you know him, but he's the guy who invented the text message, and his company did very, very well. He's still doing very well with the companies that he's running. But it's funny that an Irish guy in Dublin invented the text message, and a lot of people. Has anyone ever sent a text message before? So it's kind of cool, the world-shaking innovation that has come from Ireland in the past and will come from Ireland again in the future. We're with what, even though I am moving to the States is for my son's education, we're still going to, SOS Ventures will still have our back office here. We'll still have around 200 or so people that are working for our companies here. And we're going to, I'll be back, every other month to help with things. And we'll also be running this very strategic program in Cork called IndieBio, which is leading the world. There have been some amazing developments that have come out of that so far. The program is running right now, and companies are coming from all over the world to participate in that program in Cork. It's a global accelerator, and it's going to hopefully spin off companies to take advantage of this very strong pharmaceutical and synthetic biology sector that Ireland has. It's one of the leading manufacturers of pharmaceuticals in the world, which many of them use synthetic biology. So we're going to build off of that expertise base to hopefully have Ireland be a hub for some trillion-dollar industries going forward. So I think there's a lot we can do going forward. I think the ecosystem in Ireland is strong and getting stronger. There's a lot of awareness. Dublin has a startup commissioner. There's the Minister Bruton has done a marvelous job in making it easier for the world's best and brightest to come to Ireland through the Tech Visa program. That is now the best program for allowing the world's best and brightest to come and help jumpstart our technology industry even further. So I think the base is extremely strong for Ireland, as long as we don't get too far ahead of ourselves.
Okay.
As long as we don't drive up the cost of housing and do all those stupid things and don't do anything.
What could possibly go wrong, right?
Although there is also, just to remind you, Sean and Barry, before you depart even temporarily of our shores, that there is a long-term tradition in Ireland of the diaspora that when you go to America, you send some money home. I might remind you of that.
That's why you've always lived in Ireland, Sean.
Yeah, I walked into that, and even worse, Cavan. And being in Ireland, I mean, one of the things I was delighted this morning, because I guess many of us are always serial entrepreneurs, and you know, we were talking about raising money. I'm out now raising money as part of my new venture. I've worked in the enterprise agencies, and that's been a tremendous support, mentoring and starting entrepreneurs. I've worked in funding, and I guess I've worked in training. But I think there's another piece of the pie too, and Paul Reid was speaking this morning about in terms of Fingal, and that's the other piece of the pie that I'm involved in now, a new startup in providing space. We have a company now that I head up, co-founded, called Clyde Real Estate, and we're putting the last piece of the 4 pillars. There's
a huge issue in Dublin now, space, right?
Yeah. There is, yeah, and I guess, you know, other than the idea and the talent and the funding, you know, space is the next big thing. So as price properties go up in the centre of the city, people are moving out now to suburbs, and we've just acquired a number of properties here in Fingal in the Blanchardstown Technology and Business Park, and one of them many people in this area will be familiar with is a 330,000 square foot facility, technology facility, which was the former plant for Alcatel-Lucent, and we're converting that into a hub for both corporate, FDI, and other clients in tech and science and IT. So, I mean, I'm very, and listening to Paul this morning, I mean, you can see, what I see now is the partnership, local government, funders, the providers of space like ourselves now, and the entrepreneurs. I think it's this working together. And I think that's what's great too about the ITLG group, that it's working together in Ireland, but also internationally. It's that collective that together we're much stronger. So I'm very confident about the future, confident about the future of the tech sector, confident about the future of Fingal, confident about the future of Ireland. And I think there is a piece that these conferences do, and to me that's about changing the conversation from the negative to the positive, from the positive to the solution, and from the past, most certainly, to the future.
Great. Fantastic. So before we go to the pitches, we've got 3 companies waiting off stage to come and wow you with their technology. One final quick-fire question. You have 2 minutes in a room with Minister Noonan, and you have 3 wishes on entrepreneurship in Ireland. Elaine, what would you ask him to do? And the rest of you can be thinking about what would your recommendations be?
Well, I think taxation is a huge issue, and I think, you know, if you look at the taxation both at an employee level and also for entrepreneurs, so, you know, we've really got to make it easy to hire people competitively, and then when entrepreneurs build their business over 10 years and sell it, is it really right that they've to give, you know, such a massive chunk of that over to the state when, by comparison, they could just buy a building and up to quite recently hold it for 7 years and hold that tax-free and take no risk and employ no one. So I think actually the work that Sean did on the entrepreneurs policy was fantastic, and you know, you would have touched on a lot of these issues, but I do think making it very competitive to come here. It's no longer competitive for US guys. I mean, it's interesting that 2 of you guys are heading back, I know, for different reasons, but for the first time in my career in 20 years, it's actually better for me to be in the States than to be in Ireland. And it was never that way, because of course Uncle Sam knows how to tax, right? So, but now we're actually doing a better job in terms of higher rates. So I think that whole piece of it is fundamental.
Great. Sean, same question.
And basically the same answer. The difference is, you know, let's make sure the 12.5% corporate tax is really being taxed at 12.5%. None of this 1%, 2% stuff and letting people get off scot-free for billions.
So you think in some ways, like multinational companies coming from other countries here get a better deal than entrepreneurs?
They have negotiated that. That's nonsense. They should pay. I mean, and actually the companies themselves don't need it. I think the government has just bent over backwards, thinking that it needed to compete on that level and offer tax-free haven effectively for some of these companies. The companies themselves will stay in Ireland. They're happy to be in Ireland. They'll pay their fair share. That, you know, if they're given a very fair 12.5%
Seems
tax.
fair.
If that happens, I think we can reduce personal income taxes.
Correct. Get the balance a bit better.
That makes sense. I mean, the people need to be paying a little bit less in taxes. Corporations, in the case of those corporations in particular, need to be paying more. And then the capital gains also, it's insane to have a capital gains tax which is more than twice the ratio. There's a ratio of how companies charge, or countries have capital gains taxes, and to have a capital gains tax which is higher than half of what your regular income tax is for regular income is sort of an insanity point.
Right.
So we're past that insanity point. We have like, what is it, 33, 35?
33, well, it's 3 times the 12. Really.
That would be the equivalent of a 66% personal income tax.
Right.
We don't even charge that much for the personal income tax. That should be brought down. It should be 25.
Stop the insanity.
It's tax.
Yeah.
Yeah, you know, I mean, I think, you know, just building on that point, I think, you know, the argument that I think we need to make to the minister on the tax front is certainly not around the corporation tax. It means nothing to startups. They're all loss-making, and if they're making profits, it doesn't make a difference. It's an FDI story only. What makes a difference is tax relief for investors and tax relief for entrepreneurs. And what we're trying to navigate is, why are we getting companies that are, you know, promising companies that could be brought on to be much later stage and bigger companies selling at 30, 50, 100 million when they can go much further? And one of the reasons is because the founders are getting a life-changing amount of money and they want to take it off the table. So I think for us as investors, we need to put money into the pockets of entrepreneurs on that journey. But I think we need to also be able to offset the dilution impact of us investing in their companies by having tapered relief if they build bigger companies.
Interesting. So incent them to stay longer with the...
Stay longer. So if you stay longer, you take a certain amount off the table now, but if you stay longer and get a bigger amount of money, we will give you tax relief that will compensate for that dilution and additional risk.
Yeah.
And I think that's just not on offer here. And then on the investor side, I mean, we're totally we're uncompetitive against the UK at the moment. Right. So a lot of good stuff is happening on the R&D tax credits, the knowledge box. We really welcome that. But in terms of, you know, an investor, like we had a BES scheme, now we call it SEIS, and we get 30% income tax relief over a period of 2 years. Whereas in the UK, a private investor who wants to become an angel in an early stage business will get full income tax relief on the way in and a full capital gains tax holiday on the way out. Yeah. We need that or we're just not competitive. Right. And the other thing I think I would ask for is some incentives to get pension funds to invest more in venture.
Okay.
So we had I think a period where we put a levy on pension funds, and I think we can be smart and move away from the blunt 33% rates and start putting new initiatives on the table that would allow, on the capital gains tax side, promote investment and promote entrepreneurs going longer, and try and then on the institutional side say, look, if you're investing in early stage venture, let's get it back up to what in the States they probably have. It's only about 2% of the total pension funds under management, but we'd be way off that here in Ireland.
Great. Okay. Sean, bring us out in a high before we bring the companies on.
Yeah, I mean, I think there's no silver bullet, and I think very often politicians of all breeds and all governments have a short-term window, which is typically 3 to 5 years to an election. And so for me, and fairness to the government, what they've achieved in the last number of years, but to me, I think Ireland should now take a 15, 20-year strategy and say, where do we want to be positioned? What sectors do we want to be strong in? And go back to what we heard this morning from the Coder Dojo. Let's start in the schools. What subjects are important? What college courses are important? Integrating that joined-up thinking with industry, so that we have a follow-on, so that people are coming out are more employable, that we harness that diaspora to bring people back, the networks. I think it's a joined-up thinking that hasn't existed because we're very reactive in Ireland, typically, politically. I absolutely agree with the guys in terms of most of the companies that I see and meet are struggling for basic cash flow. Right. I'm not talking about companies who are disruptive technologies that are taking on the world. I'm talking about the SME lifeblood of the country struggling with working capital. Banks are struggling to give it to them, and companies can't grow. And so for me, I absolutely agree. If you have, and we're sitting on a lot of money in Ireland, making no interest for the owners of that money, we should release that. If the banks are not going to invest, that money should be incentivized to give investors, to put into local companies, not even those that are most disruptive technology-wise, but those that are creating jobs. And I think the second thing also, I'd also say, with regard to that investment, is that we've got to look, we've now below 10% unemployment. Around the country, and let's maybe take for a moment outside of Ireland, the people who are unemployed down in the regions in the country, outside of urban capital or capital and the urban areas, many of those are ex-tourism, ex-retail, ex-construction. They're not going into high-tech or biotech or pharma or coding. They need jobs, and I think what we need to do is to have another strategy which says we support all types of employment and make it easier for employers to start, to entrepreneurs to start, and also, most important, that we make it easy for people and reward them for creating the jobs that we need to get the economy back on a sound footing.
Okay, great. Thanks. Panel, please give them a warm round of applause.